what is the largest portion of someone's payment every month, their monthly payment?
I mean, the largest portion is always going to be the interest. On a 15-year loan, that percentage of what's going towards principal and what's going towards interest, the percentage that goes towards the principal, rather, will increase a little bit every single month you make a payment. So it's all front loaded with interest. The deeper you get into your mortgage, the more is going towards principal each month. Obviously, a shorter term loan, the larger percentage is going, a much larger percentage is going towards principal. So, yeah, I mean, interest is always going to be the largest portion until you get about 70% of the way through your mortgage.
So what I'm getting at is a lot of folks are hesitant to purchase right now because of home prices are just higher. They're higher than they were 18 months ago. But because of interest rates being so darn low, I've seen people who we've just recently closed on, their payments are lower than what they would have paid 18 months ago with a smaller purchase price.
Yeah. With to that point, yeah, absolutely. So, for example, on a $200,000 loan, if you're at a 3% interest rate over 30 years, your principal and interest will be $843 a month. If that rate was 4%, you'd be at $955. So just 1% higher, which it's very, very likely we'll see 4%, in the months or a year down the road for sure. I mean, who knows? Anything can happen, but I would bet that next year at some point we'll be seeing 4% rates for 30-year loans. So your payment will be $112 more per month if your rate was just if you waited and rates got 1% higher at the same loan amount, the same purchase price, let's say. Whereas if you spend $10,000 more on a purchase price, that is only going to equate to a payment that's about $45 more per month. So in other words, it makes a much bigger difference to get a lower interest rate than it does to get a lower purchase price. It's a booming market right now. You might have to get a little aggressive on your offers you might have to offer full price, which has become kind of the norm, as you can attest to. But keep in mind, if you have to go a few $1,000s higher with these rates, it might be what you have to do, but keep in mind you're saving so much money on the interest rate that you'll be happy that you did, as opposed to waiting and then have rates go up on you and potentially get even a little bit lower purchase price because you waited. But now if rates are higher, you just lost all that savings.